Trading with the order flow. Trading with the order flow means following the immediate price action and trading in the current direction that price is flowing. This is the most reliable form of trading. As we now know, we're not talking about the standard and faulty technical analysis definition of a trend. During a market session, there can be more than one flow direction. It can enter ranging phases or trending phases. Our job is to see the current direction, be flexible, and respond to changes in real time, just like the flowing stream. So how do we do this? By observing what price does at support and resistance and supply and demand zones. Watch for weak zones that have already been tested and traders who have become trapped at support resistance levels by market maker spikes. This will give us a heads up to future direction. One of the key principles I use to decide on order flow is a high probability engulf pattern. And this is something I've never shared outside of this course. When an important supply or demand zone is engulfed, it's often a precursor to a change in market direction. So what do we mean by engulf? Well, it's time for another diagram. So in this diagram, price has completely engulfed the demand zone, indicating a possible change in direction. Note that this has to be a supply or demand zone and not just a support or resistance level. So price completely engulfs the demand zone, as in this diagram. Now notice what happened before the demand zone was broken. A supply zone was formed. This zone before the engulf will often become the point that the trend changes direction. Not only does it signify a change in direction, but it also has a very high probability setup. This pattern will often happen at a higher time frame zone or resistance level. This is supply on the 30-minute gold chart. Now I'm going to show you an engulf, so what we want to do is go down to the 1 minute. Okay, we're on the 1 minute chart and this is the same supply zone, this big red box. Now what happened was there was a demand zone over here which got engulfed. So it's not a demand zone that I would take a setup of because we had that V, upside down V return, and also this was consolidation. So not a demand zone we would take a buy off, but the demand zone was engulfed. And what started that move that engulfed the demand zone? Well, it was this supply over here. So this is a supply zone. That's where the fast move happened, which took out the demand. And as you can see, it retraced back to supply and there was a nice move down from that. So that's your signal into a higher time frame supply zone. Once a supply demand zone is engulfed, the market will usually continue to the next zone. So as the first demand zone gets engulfed, the second demand zone becomes a target. And as the second demand zone gets engulfed, the third demand zone becomes a target. So this is a Euro USD 15-minute chart. And we have a demand zone over here. Price bounced off demand and eventually engulfed that zone. So I tend to mark these zones as a different colour once they've been engulfed. So we'll mark that as blue. Then what happened is it went to look for the next demand zone, which was over here. And price, it just narrowly missed it here, and then it bounced off of that zone here. And then eventually that zone gets engulfed too. And we'll mark that as blue. So that zone was then engulfed. And it went down to the next zone, which had really been tested, almost tested. So we'll take it from here, where the candle left the range. And it bounced over there. And then probably what would happen is eventually this zone will get engulfed too, and it will look for the next demand zone further down.